Guys, I want to welcome you to another episode of the Advisory Board podcast, where we bring in franchising experts to pick apart and create actionable feedback for you guys to be able to improve the way you operate and run your franchise systems. I've got with me Jon Ostenson today. And I got to tell you a little bit about this guy before we jump into the topic, because Jon has a great background in franchising. A lot of you guys know him. He was the president of Shelf Genie. That was an Inc. 500 company. He's been in franchising for quite a while. He owns 5 different franchises himself, but he made a shift about three and a half years ago, right, Jon? Into franchise development, to franchise consulting. And even though he's considered kind of a rookie 3 years in, he's one of the top producing guys in his ecosystem right now. We won't share numbers, but Jon's crushing it. I'll just tell you that. And I work with a lot of these guys. So I know maybe 2 people that are producing at the same level he does. Actually 3, if I think there's one other guy. But it's out of the 5,000 consultants, that's not bad. Top 0.0001% producer. One of the reasons we wanted to have Jon join us is because we're going to talk today about how franchise brands can create a different, like how they can structure their brand, structure the way they're talking about their brands to attract multi-unit buyers, to improve how sellable the concept is, and also success of the franchisees, right? So Jon's kind of an expert in that. He's the author of Non-Food Franchising. And Jon, tell us a little bit more about yourself before I bungle that up too much and we dive into the topic today.
Well, no, appreciate you having me on the show, Dave. Very kind introduction there. We stayed busy over here for sure. Based in Atlanta, Georgia. I've got a wife and 3 young kids. That keeps us pretty active here. And I've been very blessed to step into franchising. Wasn't on my radar a couple of years ago, and had a good run in the corporate world, but wanted to do something a little more entrepreneurial, and went from working for a public company to working for Shelf Genie, which was a large but private company, and had the opportunity with Alan Young, the founder, to step in and help support franchisees across North America on a day-to-day basis, and really opened my eyes to this world that I've now dubbed non-food franchising. And just seeing how it's supported so many people in their path for entrepreneurship and in their empire building, which I know we'll talk about, of how they build out portfolios. So still a franchisee of 5 different companies myself. I've got partners on each of those. I'm not running the day-to-day operations. I won't pretend that I am. But it gives me some great perspectives as I work with clients, and I've been able to help quite a few over the past few years.
Yeah, I love that. Well, and that's the background, guys, that made me want to bring Jon in to talk about this, because there are a lot of guys in franchise development who've never owned franchises. There are a lot of guys in franchise development who've owned franchises and never been a franchisor. And so Jon's got this very fascinating kind of 360 view, living the life and pushing the buttons and pulling the levers in each one of these seats. That gives him a really unique perspective, and frankly, I think fuels your success as a franchise consultant. But let's dive into the topic a little bit today, and what we're going to be talking about, guys, is, again, as a franchisor, and this is also relevant to FSOs, franchise development companies, and folks that are looking for brands to rep. How do you structure your franchise for success in growth? So building a brand that can grow. And so let's talk first about from the candidate perspective, because a lot of things have shifted, even in the 3 years that you've been doing franchise development. You started in a rough year, although it was a good year, but 2020 is when everything started to kind of shift a little bit. So good time to enter the space, and a tough time to enter the space. What's changing right now, Jon, with candidates and what they're looking for? Good candidates, right?
Yeah, we continue to see just record levels of cash on the sidelines. And, that's a good problem, but it is a problem for a lot of these folks that are trying to figure out where to place that. And so a lot of the candidates that have reached out to me say, hey, stock market's all over the place, Bitcoin, interest rates, only so many good real estate deals to be had. Where do I park some of this investment capital? And we talk about the benefits of business ownership. We talk about not just the fact that you develop cash flows and you're building towards an exit value, but you've got a third piece to that, and that's your ability to write off certain expenses you couldn't as a W-2 employee, or you couldn't with your other passive investments. So I think oftentimes our conversations revolve around the benefits of business ownership and seeing that as a piece of your portfolio. And I talk about franchising as an asset class and kind of position it that way, and that seems to really resonate in how they view their overall investment profile. So no, to your question, I mean, over the past couple of years, we have seen an evolution. Certainly we had to shake off the kind of the after effects of COVID. I think we're finally there, but now it's recession, and we've all been talking about recession for, I don't know, over a decade now. I think it's the most predicted recession that we've ever seen. But chances are, second half of this year, the economy will turn a little bit south. And again, I don't think that's going to catch anybody by surprise. But one of our conversations is, what types of industries stand to do well, if the economy does go south. And so we definitely see, not that this has changed much, but we definitely see an interest in what I would call boring businesses, things that are Amazon resistant, that are more needs-based versus discretionary, that maybe they're more cash flow and recession resistant. Those are the themes that are on people's minds. It's how do I guard my risk, play it safe, but get exposure to this beautiful area of franchising.
Yeah, well, I love that. And let's dive into it just for a minute, because what you're describing is, for a while in franchising, everyone wanted the next Poke brand. They wanted the next highly visible corner quick serve food brand. That was sexy, right? I think there's still a lot of people that are getting into franchising looking for sexy stuff. That's fine. There will always be those people. They're like, hey, I had an exit, or I got some adherence, I've got some cash, I want to be a business owner. I'm young and dumb and don't think about it the same way with the same numbers. And I don't care if it's recession resistant. Let's buy the sexy brand. There are always going to be those people. But you're describing a different type of group of people that's starting to emerge and become more common, at least in the way that you develop your franchise candidates, which is an intelligent investor that's looking at franchising as a way to diversify and stabilize a portfolio that is not stabilized right now. The marketplace is a little funky. There was a sweet spot in crypto, and right now is not the sweet spot. So a lot of people are looking to defund that and get into something more stable. There's hardly anything more stable than business ownership if you're looking at the right class of a business. So I just want to reiterate that. So the question I have then, as we turn this topic to the franchisors, is if these are the people that are buying, what are they looking for in a franchise brand? So they're saying, okay, not only do I want to look at franchise ownership as a category class, now how do you help that from a franchisor, a very sexy buyer and probably successful candidate, to make a unit generate quality royalties and succeed and build the brand properly? How do I attract that type of a candidate into my ecosystem? What are you observing there? What works?
Yeah, well, I would definitely agree with you on the point of sexy. I joke that non-sexy is the new sexy. I mean, that's what people are gravitating towards. And one of the things that's sexy, it may not be the model, it may not be the industry, but it's the fact that you have momentum. I mean, let's be honest, in franchise development, it's all about building momentum. And once you get that going and then you start getting some validation, then you're off to the races. But how do you get to that point of getting momentum? And obviously, and we hate saying it, but it's true. So much comes back to that item 19. If you're an emerging brand and you don't have this long track record, candidates want to know that item 19 has enough meat on the bone that even if you go in with a conservative pro forma and outlook and say you only do 2/3 as well or half as well as that corporate location or those first couple of franchisee movers, you want to know there's still a very attractive return on investment there. So, obviously that's a piece of it. If you have that in your arsenal as a brand, definitely play to that in a very big way, probably now more than ever. But as an emerging brand, I think, what I point to, it's the financial model, but it's also the franchise leadership team. Having been a franchisor myself and having been a multi-brand, and currently am a multi-brand franchisee, I put so much weight in that franchisor's track record. I want to see that they've supported successful, franchisees in their background, even if that was with another one. I think about Hallmark Home Care. We've had several placements there. Steve Eberhardt, he brought up a 700 unit, franchise system in the past in the senior care space. This guy has decades of experience, said there's a better mousetrap to be had, built Hallmark. And that's just a case study right there. But that's someone that I'd say it's an emerging brand, but it's not an emerging franchisor. So again, play to your strengths. If you have a great track record, but it's a new business to you, I think about even horsepower brands, some of those, brands that they're building up. I had a client, just signed, for one of their brands with 20 locations. Yeah, but look at what Josh and Zach have done with, Monster Tree and Redbox Plus. And so I think they do a good job of playing to that infrastructure they put in place, but also their track record. So I'd say between your financial model, between your competitive advantages or differentiators within your industry, certainly if you're more needs-based than discretionary, and then also that leadership team, like let's play up the area where you feel like you're strongest, because those are the areas that people are looking at. And I think you can separate yourself.
Yeah, it's interesting. I just recorded a podcast with a franchise playbook, right? And Dan Claps, Zach Nolte's on that team. They've got a pretty incredible team. And this is not meant to be an advertisement for them, but what you're describing is exactly what they were talking about from a franchisor perspective. How do we build something that's going to be appealing and it's going to be successful from the get-go? I love what you said there. It's about, and Horsepower Brands is another great example. And even Rolling Suds with Aaron Harper and that team that he's assembling, like if you look at it from a perspective of how does our franchisor team, our executive team, validate that this is going to be a successful concept, even if we're an emerging brand? That's a challenge a lot of people have. And I want to ask you a question that's important. A lot of emerging brands, they're opting to not show an item 19. I personally don't think that's a good idea. It sounds like you're probably in the same camp, but if you don't have an item 19, how do you approach, like, how do you work effectively with an intelligent buyer if you can't show them clear ROI or even really discuss it, since it's not on the item 19 in the franchise development process? I think that's a hurdle a lot of people don't know how to handle.
Yeah, it's a pretty big hurdle. I mean, it makes it look like you're hiding something. And, I think the question is, should you be franchising your business? And if the answer is yes, I mean, do you need one more year in which to build out item 19 before you roll it out? Now I'm helping a brand franchise right now that, the guy has this extensive record in the industry. He's going to put forward an item 19. The item 19 doesn't look great, but it does show over the last 3 quarters steady improvement. And if those trajectory, if that continues, then it's going to be very attractive. One thing, kind of getting back to what people are looking for and how that's evolved, I'd say 3 years ago, half of my buyers were looking to go owner operator, half semi-absentee. Mm-hmm. Today, I'd say it's probably 2/3 are looking to go semi-absentee. And what I continue to hear is as passive as possible. And that's not new news. I mean, we all know that. But as passive as possible. We want as few employees as possible because we know the labor market can be challenging, and we want the highest return possible. And so you kind of thread the needle, between all of those and work around registration states and such. But my point is, and a lot of our clients, a lot of doctors, we work with a lot of doctors, a lot of lawyers, a lot of high income W-2s. They're looking to keep the day job. Well, there are a couple of brands out there that have introduced what's called an investor model, and it's truly passive. You get on 1 or 2 calls a month, check in with the team, but the franchisor is running it for you. Now, there's a little bit of risk in that these aren't totally proven out. It's still early, but it's attractive enough of a proposition that we have candidates jumping on board with those right and left. I met with, there are a couple of brands that I represent, just one-off, they don't want to be tied into the larger broker systems, for multiple reasons. But, I met with one of those CEOs the other day for lunch. It's about 2 months ago now. And he said, Jon, how do we really put ourselves on steroids? We've done a few deals together. How do we really grow? And I said, well, if you can employ some sort of investor model where you run the business for folks, we'll grow the heck out of this. Well, he said, yeah, that's a no-brainer. He said, then we go make sure that the system's being run correctly. He said, for us, we're already supporting corporate locations. We'll put a team behind this, and essentially it'll be another balance sheet item. So it's corporate locations, franchisee funded. To me, that's the holy grail. In fact, it's so much of the holy grail that I'm in the process of buying it myself. I head down to South Florida to do some site selection in Miami in 2 weeks. And so I'm on board. And yesterday he called me and said, you told me this would work. It's working. I mean, his pipeline has never been so full. And he's got people excited, energetic, ready to go. 1, he's a trustworthy guy. 2, it's a great model. And 3, he's putting forward the model that everybody wants.
Yeah, well, this is cool. So let's if you don't mind zeroing in on this for a second, because I haven't heard anyone describe it quite like this before, but I know exactly what you're talking about. So there's like semi-absentee, absentee, but the onus is still on the investor to operate the business. And if his general manager fails, he fails. But in this particular case, you're describing a model in which the franchisor says, look, you bring your capital to the table, get this thing off the ground with your capital. You're going to check in and check numbers, and we're going to report back to you. But essentially, you're expanding this functionality of your internal support team for like the corporate stores and branching that out into a division of support for investor models. And you're running these as if they were corporate stores, yet you're not capitalizing them. Is that, I mean, that's kind of it in a nutshell, isn't it?
It absolutely is. And I'll say, this is not right for everybody. And we won't pretend like this isn't the solve for everybody, but there are going to be a few probably listening to this podcast that say, wait a minute, maybe that's something I should give further thought to. Because if you can take the time to put the pieces in place to set up that model, I mean, it's off to the races. And you think about private equity right now. I mean, I get calls multiple times a week from private equity firms saying, hey, Jon, what are you seeing out there? What franchisors are right for, potential investment? I mean, there's, again, so much money on the sidelines. They've got a mandate to go buy. I mean, you look at what Princeton's done, for instance, with some of their recent acquisitions, good example there.
Yeah.
You've got to imagine they would love this investor model. You have less franchisees involved in the day-to-day to deal with. It's easy to do a roll-up. It's easy to buy back those locations. Again, not every franchisor is set up to do this, and there are probably some rolling their eyes saying, yeah, that's not our model. But if you can open your mind, and if it does work for your business, I mean, I've just seen firsthand it could be a winner.
Yeah. Well, and what does it do to you? Think about this, though. Let's take a step back for the franchisors rolling their eyes. Not every model can do it. 100% agree with that. But let's say you shifted the model so you could. Think about what happens to your item 19. Right? All of a sudden, the peaks and valleys and the averages start to just slowly trend up because you're managing, you're helping to eliminate the variability in the operations across your system. Ultimately it's the end goal of franchising anyway, but now instead of having to worry about audit mentality and combative emotions when you're trying to tell someone how to run their business, they're just saying, no, you know how to run it. You've already built the model. Help me run this thing, do it for me, and I'll pay for it. And then I'll obviously reap the benefits on the back end, pay you a management fee. It's not like they do it for free, right? There's a management fee model, I'm guessing, involved in that. And obviously all the P&Ls on their books, the investors' books, the franchise owners' books. And yet they're getting less capital at the end of the day because of all their optional fees to manage this thing. And yet they're still cash flowing tremendously and building an asset that's a business, which I think is incredible. Please riff a little on that, Jon. I'd love to get.
I was going to say, just directionally to give you an idea, it's usually about 5% of revenue the franchisor is collecting to run the business for them. I think the franchisor also has first right of refusal upon a potential exit down the road because they want to have that option to do the roll up. So, to me, it's a win-win-win. Again, if you're set up to support that kind of business, you're also going to attract a higher level buyer. Oftentimes, you may make that investment a little bit higher, and this isn't you're going to attract the people you want to deal with. You're going to have kids across the country regardless, in this model. Yeah. But they're kids that are a whole lot more checked out, that's not affecting the business. They're being checked out. And it's just a healthier relationship. Again, it's early. And so there's not a long history here, but it's an attractive enough proposition that I see really sharp people jumping on board with it. And I'm excited because I know there's a few more in the works.
Well, and one more thought on this, just because I think about this from an investor perspective as well. Like at conferences, I get to chat with the investment guys. They always want to talk to us. We get to see the inside of unit level operations in a way that most people can never see. I mean, I could tell an investor today 7 brands they should probably go buy because I see how they operate. I'm like, holy crap, I want to buy one of those, but the territories are sold out around my house. Yeah. So similar to you, right? You get to see it from the franchise candidate perspective, right? Unique perspectives, but if I'm a franchisor, what's my net value as I'm looking for an exit? It's recurring revenue. So if you say, think about it this way, guys, is it worth the effort to what's a typical royalty fee? 5 to 7%. You're almost doubling your recurring revenue as a franchise unit. That's the only metric that the people care about. They want to make sure you're audit free, you're free of messes, right? They're not going to buy you or they're going to drop your multiple if you've got drama on the back end with your item 19s and your franchise agreements, et cetera. But the number one thing they're looking at is what is your recurring revenue as a franchise system through royalties, and this counts in that bucket. So you're almost doubling your royalty per location when you do this. As long as you can work out the operational model and your business can suit to this, I just think it's a no-brainer. I've never thought about it like that before.
Yeah. One other thought that just popped in my head around what candidates are looking for. A lot of my candidates are saying, I want a franchisor that's selective. I don't want them to just take anybody that comes to them. They feel like they've accomplished things in their career. If they were to sit down for an interview with a company, they would like that competition, behind getting the job. I think there's a similar mentality, and that's how I work with my clients. I mean, never do I chase my clients. I work with people that come to me. I don't go buy leads and chase them down. That's just a different game than how I like to play it. And I think for a lot of these franchisors, they get a little too eager, especially those first couple of franchisees. They want to grow the system. And of course, those first couple, you've got to be so discriminating. These are the ones who are going to build out your item 19. They're the ones who are going to be validating for you. I mean, have that long-term perspective and be selective in who you bring on. And I think candidates want that. They want to know there was some scrutiny. They want to truly be honored when you award them that franchise. And so I think, I always go back to, people value what they pay for. They, essentially chase what runs away from them, and they, that's how they think about it. So if you're playing hard to get, and I don't mean to be evasive, but if you don't make it super easy to join your franchise system, you have to, kind of meet with the leadership and tell us why you want this. Put them through a little bit of a test before awarding that. It's going to mean a lot more, and they're more likely to accept it and embrace it and be honored by it.
Yeah, well, and I don't mean let's not be discriminatory in any way here, but it's like a high-end vehicle, right? So if I'm looking to buy a vehicle, and I'm somebody who's highbrow and distinctiveness is important to me, I'm probably not looking at like a Honda, right? Because I'm going to see a Honda parked in front of the homes in the projects. I'm going to see a Honda parked in front of the college campus dorms. I'm going to see a Honda parked in front of a family with teenage drivers, right? Like, I'm not looking for a Honda. And as a franchisor, when you're thinking about who are your franchisees, and I had somebody tell me this the other day, who's a franchise owner, who said, I did validation calls and I didn't feel like I was on the same level with the people I was talking to. Doesn't matter if they're successful. Sometimes it's like, I don't want to associate with that person. Like we don't think the same way. We're not from the same, you can't get a super homogenous group in franchising. And that's not what this is about, is elitism. But remember that your brand and the franchisees that are buying, the candidates, if you're trying to attract them more like a higher brow, a more capitalized investor, then you want to make sure that you've got an ecosystem they're going to feel comfortable and that they belong in. Another brand I talked to, they're attracting young folks, right? They are built a model that's really effective for younger franchise owners. And he told me, he's like, I don't necessarily want a 55-year-old hyper-capitalized guy in my system. He's not going to fit in. And that's okay. Like, these guys can be successful. But you also have to remember, like, if you have such a wide spread in this candidate pool, is going to have impact on performance and also impact on culture. And that's another, I think that's kind of what you're hitting is you also have to have a culture of performance and maybe intellectual buying. And if you don't, then it's hard to change that once you've gone down that road.
Exactly. Well said.
Yeah. Well, anyway, thanks for letting me summarize for a second there. Right. I love what you're saying. This is great data. And if you're not paying attention, hopefully you're taking some notes. But guys, this is important to know, because we get to the next question, which is probably the most important. Okay, what's changing? How's the landscape shifting? Who are the buyers? So what, John? Like, okay, so I'm a franchisor. What do I need to adjust to accommodate this shift in the marketplace so that I can successfully continue to grow my franchise as an entity?
Yeah, well, I would hope that every franchisor has an avatar or multiple avatars behind who they're targeting. And I don't think you talk to every candidate the same way. I think about, I was on a panel the other day for multi-unit franchises. One of the points I made was, if you've got someone that is an investor and they've got sophisticated background, you're going to talk to them, or should talk to them, very differently than you are that owner-operator candidate that's coming out of corporate America, middle management. You're going to talk to them about you're kind of mirroring back their language and reflecting that, but you're also talking things about like tax strategy. One thing that I mentioned is, hey, I've got 3 kids. Well, they help me ship my book and they do a few other things in my business, and I pay them each $12,000 per year. It's a tax write-off to me as a business owner, but also now they've got earned income and they can roll that into a Roth IRA and into a life insurance policy. And you start them young enough, that's how you build generational wealth. It's not just me handing a business off to them down the road. Anytime I talk like that, or we talk about Section 179 and accelerating depreciation, how that's the best kind of way to kind of reduce active income, you're speaking their language, their ears perk up and they say, wait a minute, this guy's on my level or maybe even above my level. I'm listening. And, I think for brands to do the same thing and to kind of talk at that level, you're going to attract a better buyer. So again, every brand's different, but going back, I think you need to have targeted avatars and know how you handle each one. Don't treat everybody the same, because you're going to turn off some of those higher end multi-unit buyers that most franchise systems are going after.
Yeah, I can't agree with you more. What is the commodity of sales and transactions is trust. I don't know if you've ever read The Challenger Sale, but it was one. I love that book because it's all about value, right? But if you're the franchisor and you've got an avatar, and I agree with you, you got to have a couple of avatars because there are multiple types of successful franchise owners, right? There's the guy that comes from no money but is so driven. You know, it doesn't matter what you put in front of him; he's going to crush it. Like you want as many of those people as you can get, but they're hard to, they're unicorns, right? Where their willpower and their ability to prove that they can pull themselves up from the bootstrap is insane. That guy is gonna, or gal is gonna crush it. So one thing I love about franchising is it levels the playing field. So it's actually the most ethnically diverse cross section of any market anywhere. It's 3 times as diverse as just business ownership in general. But I love that about it because you can take someone from any background and make them successful if they follow the program. But you need to have a playbook. You're going to talk to that gentleman a lot differently than you're going to talk to the guy who's like, hey, I'm 50. I've been cautious with my money. I've been looking at tax write-offs and strategies, and this is going to be a different asset class in my portfolio, right? If you don't have a playbook for that guy, you're going to lose him because you're not going to have any credibility, and then you're not going to have trust. And so I love what you're saying. The Roth IRA, child, household employee strategy. Somebody were talking to me about that. I'd be like, let's talk more about, I've got 4 kids. Let's talk about this one, right? Like I'd be intrigued by that concept, but how many franchisors are capable of having that discussion and have a playbook for it? If they don't, you're a franchise broker. You hand off that sophisticated buyer lead to that person. You've handed them 2 or 3 and they can't close them. What are you going to do as a broker with that brand? See ya. Like, sorry, like you're a great concept. You can't close my leads because you can't speak to them properly. So do you find yourself, this is just a sidebar, but do you find yourself sometimes training up franchisor development teams so they can have conversations with your buyers?
Yeah, 100%. 100%. No, I try to give some context and color coming in about, hey, this is a sophisticated guy. Here's some things he's done in the past. Here's things he's looking at, how he's thinking about it. I could probably do a better job, candidly, but I try to give a little bit of color on that. You mentioned, Dave, on the portfolio piece. That's another one where I coach my clients. A lot of times they're in different stages of building out a portfolio, and I share case studies of clients of mine that have added multiple franchise brands over time, or maybe non-franchise companies plus franchise companies. And I share with them different case studies. I had 3 different clients come back in the past week or two, now for round 2. They bought from us a year ago, and now they're saying, hey, John, what are you seeing out there? Let's get into something else. And so I love seeing that. And that's something I coach my clients on is, that long-term mentality of you're building a portfolio. These opportunities may complement each other, maybe on the front end or the back end of the business, or they may be more diversifying. But essentially, don't put it takes some of the pressure off of you when you think about it that way, because what's right for you for this next season? This isn't going to be the only game you ever play. You're going to have a whole bag of games down the road. But what's right for the next season that's going to then help educate you and inform you with a better framework and lens through which to look for that next opportunity and the next one. And so that seems to help people also in their mindset and psyche.
Yeah, well, and just to riff on that for a second, a lot of these guys that are coming in as sophisticated buyers with unit 1, the franchisors that recognize I need to have a pathway, a clear pathway, and communicate a pathway that's going to help them go from 1 unit to 10 units if that's what they want. Because that's also, you can diversify your portfolio by having 5 different brands, or by having 2 different brands with 4 different units in each brand. Like either one depends upon your idea of diversification, but that becomes a preference issue more than a necessity. But I think I was talking to somebody about this recently. If you don't have the right strategy to help somebody grow from 1 to 5 units, you'll never grow to 5 units. Or they'll luck into it occasionally or buy out their neighbors that are struggling, but that's not the right strategy for that high-end buyer or for anybody really. So
totally. I think of a client of mine, back in the fall, it hasn't even been a year, back in the fall, he bought 7 territories of a property services business. He came back to me 2 months ago and said, John, what's up next? I've got a great GM in place. We're ready to launch. I'm ready for the next thing. I said, I love the mindset. Let's look at a few. Found another one. He just did 5 territories on this one. But in the same week, he came back and bought an 8th territory on that first one. That's where I get my validation. That's what gets me excited about, hey, I'm doing a good job on behalf of my clients. That probably nothing gets me more excited than seeing their successes, and they're being pleased and making referrals. And whenever they refer their brother-in-law or sister-in-law, I never know if that's a positive or negative, but
yeah, but your brother, your sister, yeah, that's definitely
that definitely is. You just never know the relationship, but that's certainly where we get the validation of what we do. Seeing examples like that.
Yeah, and if I'm a franchisor listening to this podcast, I'm going to try to find Jon right now, look him up, and get him to rep my brand, right? Because that's exactly what you want to hear. People that are buying multiple units, successfully deploying. Lots of people sell 5-packs, 7-packs. I get nervous when you get above 3. If they don't have the right team to support and deploy that, it's going to come back and bite you in the rear. But when you got guys that are deploying 7 and then buying an 8th territory and then buying another multi-unit, like that's the type of buyer that every franchise wants. So let's maybe, as we're kind of wrapping up, share a couple of thoughts about that. Like, how do you identify a good candidate for as a multi-unit owner? Like, how can you find and attract those people, and what do you need to speak differently about in your marketing, your brand's layout, your structure, so that they're interested in purchasing multiple units?
Yeah, I'd say I've been lucky to some degree, very, very blessed. The people that come to me largely, most of my business is off of referrals, or maybe they've seen an article that I've written or a podcast I've been on or something along those lines. So they come in and they've already got some education, or maybe they read my book. They know enough to be dangerous in that first conversation. So I'm not starting from scratch, and I'm never selling them. I'm consulting with them. And that sounds cliche, but there's such a difference. And understanding kind of what they're looking to do. And then I mentioned a few case studies, kind of what's the appetite, gets them excited. And I talk about things that I've personally done and, why I do it and why I continue to do it. And so I think building the credibility with them on that first call. But, I rarely have to push them to do more units. In fact, I don't think I ever push them to. They voluntarily do that because they're self-motivated and they want to build a portfolio, and they say, hey, to get to the numbers I want to get to, it's going to be multiple units. And I'm like, that sounds great. 2/3 of our clients do buy multi-units. And what you want to do is typically start your marketing efforts in a couple of zip codes of one of the territories, and then you start expanding over time every 6 months or 9 months, and you have that development schedule. Always make sure that they're comfortable with the development schedule that the franchisor is handing them. But so we talk more semantics or more nuts and bolts of how it works. But yeah, for the right buyers, you don't have to push them to do more units. They want to.
Yeah. And I imagine these multi-unit buyers are often aligned with what we described up above, right? They're looking at franchise ownership as a way to diversify their portfolio. They've got specific earning targets they're trying to hit. I mean, if you're doing your job properly as a consultant, you understand those things that make them tick in the early stages of the process. And someone's like, hey, my goal is I don't want to work for corporate America anymore. Not probably, could become, but not probably a multi-unit franchise owner. If it's, hey, I need to find a way to move some money around. I've got too much tied up here. I want to diversify my portfolio. I want to have about $25,000 of passive income coming through the door in this channel of my like, that sounds like a conversation that's going to be a very likely multi-unit franchise owner.
Yeah, I agree. And I honestly, I think the developers do a lot of the heavy lifting on the brand side. They're usually the ones that when they start looking at territory mapping and, then they show what a map looks like and people realize just how small that one territory looks, then they volunteer themselves for, hey, I want to, go bigger than that. So again, a lot of times I'm not pushing. I never push on that. And a lot of times the developers, they may be pushing on their end, but I'm able to kind of validate what they're saying in my touch bases.
Yeah, well, I love that. I love that. Jon, this has been incredibly helpful. Would you mind maybe give us a parting thought, something that you feel like, hey, every franchisor listening in today, you should probably know this thing, and then tell us how they can get in touch with you if they want to reach out.
Yeah, I'd say from my perspective, and I haven't been in consulting forever, but from what I've seen, we're seeing more activity than we've ever seen by far, and it's just continuing to build a lot of momentum out there. Great markets are going fast. I think it's a great time to be in franchising, and I'd say look at what the pros are doing. What are others doing that's working? Learn from them, even if they're outside your industry, but try to adopt those best practices. And I think a lot of the points that we hit on today around rethinking your model and just getting creative. How are you going to stand out? Not only stand out within your industry, but as candidates are looking at multiple industries, who's got the momentum and why do they have the momentum? So a little bit of homework and research on your end, I think can go a very long way in your success. And yeah, happy to connect. Our website's franbridgeconsulting.com, which I'm sure will be in the show notes. We've got a new book, Non-Food Franchising. Happy to share a free copy, or you want to buy it on Amazon, in one of the different formats. All profits go to a great charity that we support. So, we'd love to have you tap into that.
Awesome. And LinkedIn, I'm sure they can find you on LinkedIn. And And guys, we'll be sharing this and tagging him so you can find him easily if you want to pick his brain and get a little bit of his help on the side to restructure or rethink the way you're doing things. Jon, you've been awesome. So many notes on this conversation, and I'm looking forward to seeing some of the comments and the feedback from people that listen in. So thanks so much for providing great content.
Great. Thanks, Dave.
Yeah, you're very welcome.